raising bell. It helps take us beyond that bell. It's a global simulcast. It is Carol Masser, it is Tim Stenovic, and it is TV, radio, and YouTube audiences that we look at a market that really couldn't get above itself. When we're looking at a Neil Kashkari, we're looking at a Federal Reserve once again talking about a focus on inflation, we head south in terms of equities.
Yeah, you do get that feeling, Caroline, that people just ahead of the jobs report, you wonder, is it just going to provide more fuel to that Fed conversation that, hey, folks, we're going to continue raising rates, we've got to bring inflation down. And so maybe we're seeing that, Tim, play out a little bit in the equity trade today.
But is it any different than anything we've heard from Fed officials since Jackson Hole or even before Jackson Hole?
No.
Is it? No? Okay. It was a rhetorical question.
It's the unpivot from the other pivot.
We had a fun chat with Mike McKee earlier today, and I won't use the word exasperated, but
he's tired.
But he's like, guys,
Yeah.
you know,
Which word don't you understand?
Stop it, Mark.
Yeah.
Stop it.
Well, we heard from Mester and Cook today saying, yes, it is unacceptably a high inflationary environment. Yes, restoring price stability requires ongoing rate hikes. Yes, the focus is bringing inflation back down to 2%.
And the bond market gets it, Taylor. The bond market gets it. The yields have been pushing higher finally, but it was interesting that we had that sudden plummet in the yields story earlier this week. That almost is what gave the reprieve to the stock market, really.
We really heard that, you guys, for our radio audience, from Jonathan Golub over at Credit Suisse, saying that the equity markets do indeed get a reprieve from at least those bond yields falling, even though it's temporary.
Today, no reprieve. If you're long the S&P, you're down by 40 points. Let's look at as the markets ring. And look at Mondelez trying to celebrate. There's the giant Oreo. There's your Milka cow. And they ring the bell after 10 years having spun out of Kraft Foods. We just had the CEO on of Mondelez, of course. But overall, we're looking at an S&P that is off by 39 points, more than a percentage point lower. We're looking at a NASDAQ that's off by 75 points, almost 0.7% lower, and a Dow that's off by more than a percentage point. Let's broaden it out. Let's look at the small caps, because the Russell 2000 also having a tough time of it, but actually your outperformer is only off by 0.6%, Carol.
Yeah, all I can think about is Oreos and some milk right now. All right.
Oreos are vegan, Carol. You can eat that.
we have.
Does that mean they're healthy?
I know we're going off the rails here, but we do have new 4-packs of Oreos here for snacks. I just got one today.
Who needs 4 when you can have 100? You can't just have 4.
Well, anyway, the S&P 500, most names in the index, we're going to dig a little bit deeper, about 415 lower today, Taylor, 88 actually higher, but you saw that negative scent building as those equity averages moved to just off their lows of the session.
You know, Carol, I'm too short for this, but if I blocked out this that says one day and covered that, you might think that this chart is year to date. Take a look at energy. It's the only sector, again, in the green. It's up another 1.8% for the day, and that really just has been the incredible story for the year as we're continuing to see sort of day 2 of those OPEC production cuts and the ramification on this energy market. I'll take you down to the bottom as well, some of the underperformers, and that too is sort of another similar theme that we've been talking about in the last few days. Food and beverage, real estate, utilities, again, as yields are rising, those are some of the sectors that are traditionally pressured. Carol, those are off about 3.5%.
I love that you said energy. We talked with Jessica Beamer over at Easterly Investment, and she said that's a play to put new money to, and she says it's going to be important in our economy for a long time, and she says it's under-owned in a lot of portfolios, so that was one of the groups that she liked. All right, to some of the gainers, specific gainers. Costco, up as much as 2.8% today, still holding on to about a 0.5% gain in the trade. It was top in the NASDAQ 100. The September total comp sales from the company, they were beat up 8.5% versus an estimate of up to 6.3%. So this company, Alice pointing out, gaining market share as consumers increasingly look for value. Peloton, check it out, up 8% at its highs today, finishing the day with a 4% gain. Still only about an $8, almost $9 stock here, cutting jobs for the 4th time. The company's CEO telling staff today the move needed in an effort to save the struggling business. The cut roughly 500 globally, or 12%. And then check out cannabis stocks. What a high, I should say, or what's it?
You can do that.
Yeah, on a high, I guess I should say. I know, it's really bad. Up about 31% here. This as the Biden administration to order a sweeping review of the drugs treatment by law enforcement authorities. So we really did see a boost in many of the names and the ETFs that play in that space, Tim.
Yeah, Tilray up more than 30%. Look at that.
And
some other ones up too, Carol. You got the gainers, I got the decliners. I want to start with shares of Tesla today. Underperforming the S&P 500, but bouncing around for much of the day. We did have so much Twitter news today. Worth checking out what happened with shares of Tesla, where, of course, a lot of Elon Musk's net worth is tied up. Speaking of Twitter, shares falling more than 3.6% today. Elon Musk asking a Delaware judge to pause further action when it comes to Twitter's lawsuit against him, saying the social media company will not take yes for an answer. And then we did also learn earlier in the day that talks between the two sides have been stuck after Musk said that his offer is now contingent on receiving $13 billion in debt financing. That's according to our reporting here at Bloomberg. And then Generac, shares falling down more than 5.6%, or 5.6% exactly. Bank of America downgraded the generator maker to neutral from buy. They say there's greater risk of the company issuing weaker 2023 guidance. Shares are down more than 66% since November highs of last year.
It's been a really volatile stock of late. Meanwhile, what's also been volatile is your cross-asset space, your FX space in particular. I want to talk about what's happening with King Dollar. We're back up once again in the green, up 0.7%. We're seeing a stronger US dollar because we have those comments coming from Lisa Cook. We have those comments coming from Anil Kashkari, who is saying that we are still so focused on inflation. We are not pivoting. We therefore see weakness across the board. Interestingly, you see weakness in the Norwegian krone when oil has been managing to fight off a stronger dollar. Interestingly, you see the loonie, the Canadian dollar, also weakening. That's off by 0.9%. Now, this is more to do, interestingly, it's also weakening as we see a very hawkish, well, more hawkish than anticipated, Bank of Canada once again speaking up about its determination to tackle inflation. And that sort of perhaps gave some impetus to why we think the hawkish nature from the Fed is going to stick. The pound having a very ugly day as we once again question the fiscal policy coming from that nation and indeed the overall fundamentals for the UK. We're looking at Brent crude, as I said, pushing higher, WTI up 1.5%, $88, $89 a barrel now. 4 straight days of gains after OPEC Plus says we will be curtailing production. And sovereign bonds, just a sell-off across the board. Greek yields, Belgium yields, German even pushing up some 9 basis points. And as I say, the Canadian yields, 2-year, up 12 basis points as we get that more hawkish tone coming from the Bank of Canada.
We're getting closer in the U.S., up 9 basis points on the front end here, and pretty much up about 6 to maybe 3, as you can see there, further out, longer out on that yield curve. And Carol, for me, as always, when we focus on the front end of the yield curve, it's how sticky that is when you think about all the Fed speak we have, and again, that really key labor data that we're going to get tomorrow as well, and how the Fed can or cannot move on the heels of that.
Yeah, in a market environment where we saw that significant 2-day rally earlier in this week, you do think about that if there is any signs of weakness in that monthly jobs report, if we see in terms of wages that inflationary pressure component comes down at all, it would be very easy to see some kind of rally because it feels like investors are looking for reasons to think that the Fed is going to be less hawkish despite all the Fed commentary. So what we get on that print at 8:30 is really going to set the tone tomorrow, Tim.
Yeah, and actually, again, going back to what Mike McKee told us earlier in the day, if you like the numbers that we got this morning, and he was kind of laughing about it, then you'll love the numbers that we get next Thursday morning when it comes to initial jobless claims, because half of Florida essentially wasn't able to work over the last week as a result of the hurricane that devastated many parts of the state. So you look for softness anywhere you can get it, but oftentimes it comes with some sort of asterisk.
Well, the asterisk usually being a Fed speaker who comes out and knocks it back and says, no, we're still focused on inflation. That's why the CPI print next week is going to be also important. And indeed, some of the wage data that we get within the non-farm payrolls, how strong, how sticky. We were just having Jonathan Golub over from Credit Suisse saying that there's going to be a stickiness within the inflation area because it's going to be wages, how much the Fed wants to fight that element.
Interesting. I always love the Morgan Stanley note that comes out about this time and looking at wages, that average hourly earnings rising again about 0.5% for the month, and that year-over-year rate is again about 5.1%. So, Caroline, it sounds like some of these average hourly earnings and some of these wages are proving to be a bit sticky.
Interestingly, we're going to have Seth Carpenter of Morgan Stanley on a little bit later, talking more broadly the global story here. And I wonder if we'll talk a little bit about oil, about how much that's still such an inflationary pressure point. It was interesting that this wasn't just a US sell-off, Carol. This was a global market sell-off. European markets sunk as well.
Yeah, and I keep thinking about bottom for stocks, right? Top in rates and something that we put to Jessica Beamer also about that. And she said, when we start to get earnings, it's going to be so important. What they say about the third quarter and specifically about the fourth quarter outlook will have a significant impact on stocks, whether or not they bottom or not. If there's some optimism and some good transparency in terms of what's to come, then we could see some bottoming. If there's a lot of questions and uncertainty, that could be tough on the equity play.
All right, we're going to start to hear from banks in the coming weeks, so we're going to get a good idea of the way that they're thinking about the economy. Always a good barometer for an understanding of what's happening on Main Street.
All right, less than 24 hours away from that jobs report. That's something certainly that will dominate our conversation tomorrow. That is a wrap, guys. We will see you tomorrow. A wrap. Our cross-platform coverage on radio, TV, YouTube. We call it Beyond the Bell. We will be here again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovec on Bloomberg Radio.